Hi, my name is Michelle Holmes, and welcome to another edition of CMS Forex News. Today is Monday, June 2nd, 2008. In the UK, the manufacturing PMI fell to its lowest level since July 2005. The May reading is now right at the 50 boom-bust level, separating contraction and expansion. In a second release, there were 58,000 new mortgage loans granted by banks in April. It's the lowest level since the series started 9 years ago. Lenders are limiting the amount of loans they offer as they try to shore up their balance sheets in response to the credit crunch. Adding to the weak data, Bradford and Bingley, the UK's biggest mortgage lender to landlords, said it will sell shares at 33% discount, bringing back concerns over the health of credit markets. This led to unwinding of carry trade positions with the yen, which is a big benefactor. The pound-yen pair fell more than 350 pips from the week's open as a result, wiping away all the gains from last week. In the U.S., the ISM Manufacturing Index rose 1 point to 49.6, still mired in contraction. The result was better than expected. Prices continued to increase, adding pressure on inflation and increasing the case for the Fed to move back towards an inflation bias in their statements. The dollar-yen pair was down more than 100 pips as overnight losses that started in the European session continued in New York trading. The Dow Jones Index was 200 points lower at 1 p.m. Eastern Time. The increase to risk aversion helped the yen and the Swiss franc. Against the Canadian dollar, the U.S. dollar was up about 70 pips, breaking above parity for the first time in 2 weeks. The Canadian dollar is a prime destination for carry trade as it is tied to global growth in commodities. Therefore, today's increase in risk aversion pressured the loonie. There were several reports that came out of Australia. Inflation, as measured by TD Securities and the Melbourne Institute, was up 0.3% on the month of May, while the annual rate climbed 4.5%. Retail sales for April were down 0.2%, indicating that consumers are spending less as a result of tougher economic conditions. Companies' operating profits for the first quarter grew 2.2%, lower than the rate in the fourth quarter. Companies are being squeezed by higher credit costs, soaring energy prices, and weaker sales. Australia's manufacturing PMI fell by 1.5 points to 51.2, following a 0.4 rise in April. Slower global growth, the rising Australian dollar, and signs of a slower growth in the domestic economy continued to constrain manufacturing. In a final release, commodity prices were up 28.6% on the year, led by an increase in coal and iron ore, two of Australia's biggest exports. The Aussie had a rough day against the yen, as it is also a commodity currency that is a destination for carry trade flows. The Aussie yen was down 130 pips at its lowest point this session, which pairs most of the Aussie's gains from last week. In Switzerland, GDP for the first quarter grew 0.3% compared to 0.9% in the fourth quarter. The Swiss economy grew 3% compared to the same quarter last year, below expectations of a 3.3% rise. The SVME Purchasing Managers Index fell 1 point in May to end the month at 55.7. The index's third fall in the last 4 months points to a modest slowdown in the continued expansion of industrial activity. The Swiss franc gained on the U.S. dollar as carry trade sentiments overpowered the weaker fundamental data coming out of the Swiss economy. The franc-dollar pair was down 80 pips today and was 180 pips off Friday's high. Just like the yen, the franc is boosted by risk aversion in the Forex markets. Tonight, Australia releases data on building approvals, current account, and GDP. The Reserve Bank of Australia will also decide on rates. Overnight, Switzerland posted CPI. Also overnight, the UK will release reports on housing prices and construction activity. The Eurozone will reveal producer prices and its revised version of first quarter GDP. Tomorrow morning, the U.S. posts factories orders. That wraps it up for the day in Forex News. Join us here again tomorrow at cmsfx.com.